What's going on, guys? Welcome back to another video. In today's video, I want to get into the charts and I really want to break down the ultimate scalping strategy for you guys in 2026, especially when it comes to trading gold. Now, you guys have heard a lot about my strategy BC30, but there is a way to break it down even further to be a little bit more scalper friendly, and as a result, probably more friendly for a lot of prop firms, especially if you're into trading those futures prop firms where you kind of have to scalp a little more. All right, so we're going to get into the charts today. We're going to go through some examples and we're going to get into how to use this strategy to find success in your trading in 2026. Let's get it. All right, guys, so we have the gold chart open up here, and I do want to do a little refresher on BC30 because the strategy that we'll be using for scalping is going to be called BC15. So the refresher is going to be important so you understand where the core of the strategy comes from and how we further break it down with the BC15. All right, so with the BC30 strategy, this is what I'm looking to do. A couple of things. First thing I want to do is I want to do some top-down analysis using support and resistance. Now, people are going to do the top-down analysis a little differently. Some people are going to use trend lines. Some people are going to use different types of indicators, but I like to simply use support and resistance, starting from the daily time frame and then working my way down until I get to the 30-minute time frame. So let's do that together real quick. Starting with the daily time frame, I'm looking at gold, and although I would usually just mark off most recent price, what we've been seeing as of recently, like usually up here, etc., whatever, but I'm going to start back here a little bit because I know I want to go through some examples of BC30 with you guys. So I see an area of resistance up here. I usually like to draw my zones all the way across, even though it goes through a candle. Why? Because previous resistance or support can turn into future resistance or support, as we see here, right? Over here we have this as an area of resistance. However, this soon became an area of support for price, where price bounced off this area. As you see, that daily candle bounced off that area, right? So we look for more and more areas like this. Okay, although this area, there's a few wicks here, it's probably going to be clearer on like the 4-hour time frame and probably see an area of support over here. So I'll wait till I get to the 4-hour time frame, but this is what I'm going to mark up for now. The obvious area of support over here, down here, the area of resistance that I'm going to drag all the way across, and then also became the area of support for price over here. You can also mark off the highest high as well, because that's going to be resistance. This was the all-time high, so you can mark this off as well, which I will do as well. Okay, let's continue. Let's go down to now the 4-hour time frame. So now we're on a 4-hour time frame. We're looking for more areas of support and resistance, continuing our top-down analysis. This was that area I was talking about over here, right? This was a bit of a struggle area for price, so just a little bit of support in this area. So I am going to draw that across because it was significant to a certain degree, and I'm going to drag that all the way across. Okay, and I'm going to look for any more areas that I've seen. I'm going to mark off this area just in case I want to use it as an example with you guys. Area of support and also area of resistance for price as well up here. Okay, so that's where we're at. Going to go down to the 1 hour and see if there's any final things that I've missed. In the 1 hour time frame, there's a lot more information, right? A lot more data, so we can go into the intricate details of this specific consolidation area and find more smaller areas of support and resistance. And that's usually how I'm going to start executing my trades. So for example, I can use this area over here as a small area of support because price bounced off of this area multiple times. I could also use this area over here as a small area of resistance because we have multiple touches to that area that did not break through. Okay, but we did break through over here, and this will be significant again when we go through our BC30 type of system. All right, so I'm going to look for more areas like that, like over here, most recently here. This was an area of support, obviously, for price. Price bounced off this area multiple times, and I'm going to continue and just find this last area over here. This was the most recent area of support for price, bounced over here a couple times. I'll drag that across, and it also turns into an area of resistance for price as well. Okay, so now we've done our work in terms of marking off our areas of support and resistance, and now we want to go to the 30-minute time frame, because this is where a lot of the execution is going to happen for BC30. Okay, now as we're in the 30-minute time frame, specifically what we want to see, right? We want to box in an area first of all, right? So we've done a lot of our support and resistance, etc., right? But if we see more areas like that on the 30-minute time frame, we can do that all in a hope to box in an area, because what we want to do is box in that area so we can then determine where that break of momentum is going to come from. Okay, so it's going to come out of that area at some point. And in order for it to come out of that area, we need some kind of momentum in the market. And that's going to be our indicator that our strategy is active, it's live, and we need to pay attention here and get ready to execute if possible, right? So first example that we'll go through, let's go over here, back here. So let's imagine we are in this area of consolidation, this small area of consolidation right over here. Okay, so we're in this area of consolidation, and what we are looking for is for the break of this area of consolidation. So we're looking for the break of that area. In order for me to get that, in order for me to really know that that area has been broken out of, I will utilize alerts. I will utilize the trading view alerts, right? So I would have an alert up here above the area of resistance, and I would also have an alert down here below the area of support. Now, some people may ask, why do I have alerts both above the area of resistance and below the area of support? Why don't I choose a direction, right? Why don't you have, in other words, a bias? Here's what I realized about having a bias. And I've done all of that trading before, but this is what I've realized. When you have set yourself on a specific bias on where you believe the market is going to go, it's not that you can't do that, but it's just that when you just set that up and you just keep that in your mind, you also are going to see the market in a lens of hoping that your bias is correct. Even when you say that, you know what, if the market changes, I'll change my bias. A lot of times, most of the time, you are actually hoping your bias is correct, and that shapes how you view the market, and that causes you to be a little late to the party when it comes to switching that bias. So for me, I'd rather come into the market with no bias at all. I don't want to come with any preconceived notion. Now, obviously, I've been trading for a while, so I have some ideas of where I would think price would go, right? Especially if it's trending already. But that doesn't matter to me at all. I don't care where price goes. I just care about the break of structure. That's all I care about, because the break of structure, even in a trending market, the break of structure can still come the opposite direction, because we are still in a way in a higher time frame retest, and I can get a good move from that, and that's probably all I need for the day. All right, or it can go the same direction of the actual trend, and then that'll be just fine, extra confluence, sure. But ultimately, I really don't care that it goes any specific way. I just want to know where it's breaking, and because that's clearly an indication of momentum, and I need to utilize that momentum in order to execute the BC30 strategy. Okay, so what we want to do is we want to figure out where is the break. Where is the break coming from? Okay, so in this particular case, the break came from this candle right over here. Okay, and after the break came, the next thing that I want to see, here's the thing about a break in my strategy. I would consider a break not only when the candle just comes above the area of resistance or below the area of support, right? Because it's going to hit my alert. This hits my alert. This candle over here hits my alert. But for me, the body of the candle also is very important, that the body of the candle closes above the area of resistance in this case, because we have a break of structure above the resistance, right? Or below the area of support if it was a break below the area of support. It's important that the body of the candle, not just the wick, reaches up and comes back down, but like I'm talking about the actual body of the candle, it needs to close above the area of resistance. Here, just about made it, but I wouldn't be mad at you either if you waited for the very next candle for that extra confirmation. But here, just about made it, closed right there above that area of resistance. And so this is going to be considered our breaking candle. Okay, so this is our breaking candle in this BC30 strategy. Now, the next part of the strategy is that you want to then enter the trade once the candle after the breaking candle is pushing beyond the breaking candle. Okay, so once the next candle forms, the next 30-minute candle is forming, right? All I'm looking for right now is for this candle to start pushing past this breaking candle. Okay, as it starts pushing past this breaking candle, I want to enter this trade and usually want to ride it to the next zone, next area of resistance in this case. But the point is, whether you take it all the way to the end of the zone or you just want to take enough for your trading goal or whatever your goal is for the day, that's what you want to do, and that's how you execute BC30 successfully. For me, I probably would have taken it knowing that as I'm looking to the left and comparing from where recent price is, I see some wicks. There's a struggle that happened before it got to the top here, this area of resistance all the way up here. If you look at these candles, there was a little bit of a struggle. I probably would have considered where the bodies of the candle ended, and this is probably where I would have TP'd in terms of this area over here. This is probably where would have been comfortable with TPing, because I know this is the last area that we saw the body of the candles close. All right, so that's pretty much how I would use my strategy, my BC30 strategy. Okay, now, although this is a very, very successful strategy, especially when you're trading Forex, when you're trading many different types of things, I realize, however, when you're trading futures, especially if you are not necessarily going for much, especially if you're just scalping, sometimes it's a little tough to wait for the full 30-minute candle, because a lot of times the momentum that you really needed, it's already gone, right? So we may not necessarily have to wait for the whole 30-minute candle to formulate, to close, etc., and then get into the next 30-minute candle. So as a result, had to expand the strategy a little bit more to accommodate for like a scalper's type of mentality, especially when dealing with futures, right? And that's where we get the BC15. So we go down a time frame on the 15-minute time frame. Okay, so we go down a time frame on the 15-minute time frame, and a lot doesn't really change when it comes to the strategy, right? Strategy is pretty much the same, and you probably are going to see a bit more opportunities. The difference is you're able to take more advantage of the momentum using the 15-minute time frame. Now, I'll just caution you by saying this. The further you go down in time frame, what I've realized in trading is the less you can be confident in that particular confluence on that time frame. In other words, this is what I'm saying. A confluence on a higher time frame is always going to be a stronger confirmation of something than a confluence on a lower time frame, right? On a lower time frame, you're going to get a lot of variety of different types of things going on. You're going to get trending, and you're going to get reversals. You're going to get some Fibonacci retracements, etc. Whatever you're going to get everything you desire, but they're going to be a little erratic, right? You're going to get a little bit of everything. So sometimes they'll work out, and then sometimes they won't work out. In other words, what you'll realize is your win rate may go down just a little bit, right? So you have to be careful when you're utilizing BC15. When you're on the 15-minute time frame, you may not have as best of a hit rate as you would have had on the 30-minute time frame. So you have a decision to make, right? In a market that is moving pretty smoothly, that's trending, I would always prefer that you stay with BC30. Okay, if the market is trending and it's moving pretty smoothly, I would strongly suggest stay with BC30, because you're just going to get better moves using BC30. However, where BC15 I realize is appropriate is when the market is really choppy. When the market is really choppy, you're better off getting those quicker moves, because they'll go up, they'll go down, but they'll quickly retrace back. So you'll get a lot of wick action on like a 30-minute time frame, on a 1 hour time frame. They will quickly retrace back. Let me see if I can find some examples of what I'm talking about, because actually this week we've had a pretty choppy market. And as you can see over here, look at the 1 hour, right? It's not that you don't have candles that didn't really go significantly, but it is that there's been a lot of wick action. And with that wick action, when you're actually trading in the live market, it gets really messy. It's not easy to trade that. Even though you see how the candles are printed right now, that's not really your experience when you're actually trading. When you're actually trading, it's a bit more difficult because the candle will come all the way down and then it will trace all the way back up, back to its open price. So with that will probably be your whole stop loss, even though at the end when it printed, it looks like it printed like a good candle. But it was actually really, really choppy. So in these scenarios, when the market environment changes and you have a very, very choppy market, it's not really that clean, I would suggest BC15. Why? Because you'll get those quicker opportunities. You'll get in, you'll get out, and you'll probably have a decent success rate in doing so. Okay. So in other words, for example, this example over here, we have a small area of support over here that we see price has settled at, right? I want to box price in other words. So I want to box all of this in, all of this action that's going on down here. I want to box it in. Then we have our breaking candle. We have our breaking candle right over here. Okay, let me draw this line over here. This is our breaking candle. And then we want to get in after our breaking candle, and we want to ride that to the top as best as we can. We get in, we get out, and that is a successful trade. Okay, that is BC15. That is a successful trade. We're going to look for more examples as well for BC15. Okay, all right, so let's look for another area where we could have executed BC15. Okay, so let's look for an area like over here. We have multiple touches to this area of support over here. Okay, and as price is here, if we box it in, all right, box it in, you're looking for that breaking candle. Okay, now it takes a lot of work, a lot of eye work to be able to see small areas of support resistance on a smaller time frame, but eventually you get used to it, right, and you start seeing it a little bit more. Now we have this breaking candle over here, and although we don't have a whole lot of room to the upside, okay, but it's still a decent move. You could still make, to be honest with you, could still make a couple hundred to even $1,000, thousands of dollars, depending on your contract size, with this small move over here. Okay, it's still a valid move. Okay, you're riding it from the entry candle all the way to the top of the resistance up here. That is a solid move again for BC15, and we could keep doing this over and over and over. The different ways of doing this: you have this area of support down here already. You have a small area of resistance, right? Price struggle just a bit all over here. And then you have your breaking candle right over here. Here's your breaking candle. You enter on the next candle, and voila. Again, you have another successful BC15 move. Okay, so this is what you want to do. Again, guys, very important when you are executing this type of strategy is important, because as you can see, this is a little bit of an erratic type of price action, so you really have to know how to trade it. Okay, so this is just a means of how to trade it, but again, it takes some practice, it takes some time, some experience to be able to see what's really going on the charts, to even understand the market environment, and to be able to execute effectively. But this can really help a lot of scalpers, people who are really reliant on momentum in order to find their moves. This might be a strategy for you. All right, so guys, BC30, BC15, very successful strategy. I've made tons of payouts. My traders have made thousands, tens of thousands, believe it or not, hundreds of thousands of dollars with BC30, BC15, and it continues to pay, continues to find success. And I know that you'll find success if you know how to implement it as well. It will take some time, it will take some practice. You won't get it right all the time, and it won't hit all the time, because it's not going to be 100%, but it is a winning strategy if you're executing it the right way and following the rules. Okay,